NASDAQ and Dow Jones hit all-time records. S&P 500 is approaching all-time records. Small caps break out to fresh 52-week highs, almost a 2-year high. However, market breadth is flashing overbought conditions, but is the correction imminent? We will look at a similar example from 2021 and what market breadth did back then. Dollar reverses to the downside and we're still waiting for gold to rally. It's a very weird situation. We will try to see what's going on with the dollar and gold. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, December 15th, 2023. As always, please remember that your likes, your shares, and your reposts and your comments on this video is what keeps this channel going. So if you have any questions or if you have any comments, please make a comment in the comment section below. If you're a subscriber, stay tuned. We have a separate video coming up. We're going to cover quite a bit of various securities, some of the ETFs, some of the large cap stocks, as well as some of the more speculative stocks. Like, for example, I'm going to look at some of the new additions this week: Caribou Biosciences, Delta Airlines, Goodyear. Iris Energy looks very interesting. Lyft also coming up on a very interesting pattern. We will also look at Rivian, the company that was supposed to destroy Tesla. And Twist Bio, very nice move. Congratulations if you got in. As always, I'm going to be using MasterChartsTrading.com price action indicators. You can see them on this chart, this green, blue, red, and yellow lines. This is a TradingView interface. You can have the same lines on your chart. You only need to open a free TradingView account, sign up on my site, MasterChartsTrading.com, and I will open the door for you on TradingView so you can have the same indicators on your site. Looking at S&P 500, these are 52-week highs. Yesterday was a fresh 52-week high. We had a very big surge here on Wednesday, the 13th, when Chairman Powell announced that they're not going to be tightening, but they might actually be relaxing the interest rates or lowering the interest rates. This caused a very big rally. So overall, the picture hasn't really changed much. We have consistently said that S&P 500 is in a bull market, in an uptrend. As late as April of this year, or if we use the dividend, or rather, if we use the S&P 500 with dividends included, notice this breakout that occurred on February 2nd, 2023 this year. This is all I really needed to know about whether this security, in this case S&P 500, was in an uptrend or a downtrend. In fact, in February of this year, almost a year ago, we said that we're now in an uptrend. We should be thinking about buying. And we were doing just that. For example, for the S&P 500, notice this up blue arrows. These are actual alerts. And notice the very nice moves afterwards. The latest one, I personally got in. There it is. I bought S&P 500 ETF SPY at $423 on Monday the 23rd of October. Why? So my system goes like this. If the security closes above the blue line, as in, for example, back here in February, or again here in April, we just buy. Because previously it was below the yellow line, so we have a new breakout. However, once the security is already above the blue support resistance line, we need to see a pullback. And we got this pullback that began in July of this year, late July. This is 27th of July, and lasted until October, late October. So August, September, October, so 3 months of corrective action, which not really big, correction, but it was pretty classic kind of correction. We sort of traded sideways to down, and then finally we stopped going down and started going up. So when my system goes like this, if the security closes below the blue line and then closes above it, this is when we buy. That's my trigger. Okay, that's all I really needed to know again. So I went ahead and I bought. So we're about this latest trade, we're about 12% up or so. Will we get a pullback? Now that's $1 million question, and we are going to answer that hopefully soon, in a few minutes. So looking at weekly chart of S&P 500, don't be afraid by saying what I'm saying weekly. Notice here where it says intervals. So all you have to do is change it to weekly. So if you're going to change it to weekly and you have my indicators, make sure you change the length on my indicators to 52. There are 52 weeks in a year. So looking at this chart, notice that S&P 500 is 1.67% away from all-time highs. This is a very small amount for stocks. We could take that out very easily next week. However, of course, notice that we have been going up straight for 1, 2, 3, 4, 5, 6, 7 weeks in a row, and it's not. It's not impossible, but it's also sometimes we may need to take a break pretty soon. Look at this move. It's a pretty strong move. Also notice these gaps here. So there's a lot of gaps. I think this gap here between 13th of November and 14th of November could easily get closed if we get a pullback. However, there's a strong possibility that we break to new records, to all-time records, and just continue higher. That's also very much in the card. I do not foresee a reversal right this instant. I do not foresee a reversal back into a downtrend. We need to see some incredible top-in action, and then we have to reverse and kind of start going down afterwards. But I just don't see any of it right this instant. So for now, looks like the bull market is alive and well, and we're looking for buying opportunities for stocks. And here's NASDAQ QQQ at all-time highs. It broke out to all-time highs, I believe this week or last week. Yeah, this week, yes, we broke out to all-time highs, record highs, above the previous high of November 2021. So I think it's a good thing. We anticipate more highs. As very long-term traders, let's say you trade on weekly chart, and let's say you actually shorted it sometime. I don't know when you shorted it, but let's just pretend that you shorted it here in July of this year. And you actually got a little bit of a move in your favor, but then we have a reversal going on, and now we're making all-time highs. Now, if you shorted QQQ back here in July, where did you put your stop? One place to put your stop is at 52-week highs, but some people put their stops even higher at all-time highs. So right now, we're taking out those short stops for all-time highs for very big traders. So short stops imply that they need to cover, the shorts need to cover, the bears need to cover their short bets or bearish bets. And covering a bearish bet means you have to buy a stock on an open market to cover what you borrowed. And so at new all-time highs, there's going to, and I think it's going to be another short squeeze is going to be unfolding. So I think that's what's happening right now with QQQ. As far as S&P 500, we made a 52-week high This is a 52-week high right here on, let me see, on December 11th of this year, so just a few days ago, last week. And that's a 52-week high, right? And so normally, again, you put your stop, your short stop above previous high. This is a previous high from July 23rd, 27th of this year. So once again, you have to cover it. If you're short, you have to buy an open market, and this is exactly what we're getting. We're getting this short squeeze, short covering rally. So we have definitely we're definitely getting this short covering rally. I think it could continue. There is no way to know when this will stop. When we get to market breadth, I will show you that market breadth is overbought. Looking at Dow Jones, DIA, even stronger performance. There's Dow Jones. Broke out actually 2 weeks ago on the week of 27th of November, late November, and then continued higher, 2 new all-time highs when we closed Dow Jones Industrial Average. We closed today at 37,305, above previous high of 36,952. So overall, very good action. I think we're taking a full advantage of this rally. We're long. I am personally long. My subscribers are hopefully long, or at least definitely not short. We've been pretty much trading on the upside. Some traders use options, and when they use options, sometimes those moves are pretty large. So, for example, ARK, excuse me, ARK Innovations recently. This is actual trade. I had a trade like this. Actual trade I bought a while back here. ARK Innovation 43.95. I just sent an alert on November 17th, right there where I'm hovering. And if you got in, this move from 42 to 51, that's a $10 move. I mean, if you had options, it could easily have been like hundreds of percent right there. So again, if you got in, if you are long, if you're buying on if you're buying stocks, I think this is right now the way to go. I do not want to contemplate shorts right this instant. And looking at small caps, IWM. So small caps have been underperforming pretty badly. However, finally they are breaking out, and indeed these are 52-week highs. I'm going to show it to you on the weekly chart. So there it is, 52-week highs. Broke out. It's actually approaching 2-year highs. It's like year and a half high, but for our practical purposes, 52-week high. So finally we're seeing this breakout out of this range. I'm gonna mark this range. There it is. So I think we're breaking out of this range that started like in April 2022. And I think finally we're doing this, we're breaking out. So as far as small caps, they are somewhat different than, for example, Dow Jones, but there is still high degree of correlation between the two, and this is a correlation coefficient. Overall, stocks and other stocks move together in lockstep, so notice correlation is very high. So we're looking at the small caps, and I think they are going to play catch up, if anything, and this is a 52-week high, so we have ways to room to run to the upside for sure. This is actually my trade as well, IWM small caps. I had a position, I just bought it recently, a few days ago actually, on December 7th. I bought IWM small caps at 186 here. and then a few days later, this is the surge during the Powell pivot to the more less worry about inflation and more worry about recession worries. So right now they're thinking about lowering the interest rates next year, and this is exactly what happened on the 13th of December, on Wednesday of this year, 2023. There was like all of a sudden we see a completely turnaround of the opinion, and stocks surge afterwards. So the next day, on the 14th of December, I sold about a quarter of my position at 198. So that's a nice gain. So I bought at 186, and it's about 12% gain. So I sold about a quarter of my position. I still have about 3/4 remaining. Sometimes they just keep going, but I'd like to, at least have a profit, and I also moved my stop to entry. So this is how we basically trade here at masterchartstrading.com. Do sign up if you are interested. Alright, so now what I wanted to do is I wanted to look at market breadth. So market breadth indicators, I have 3 of my favorites. One is Bullish percent index. Alright, I'm gonna just quickly show what that is. So if you go to stockcharts.com, you can look Bullish percent index, and it will tell you what it is. So Bullish percent index is based on a type of charting called point and figure. It looks kind of like that. It's not really used that often anymore, but if there is a buy signal, according to this system, we will count it as +1. So each stock within the index, for example S&P 500, will have either is on a buy signal +1, or if it's on a sell signal, it will have 0 value assigned to it. So, and thus we can create an index. So Bullish percent index, $BPSPX on tradingview.com is the ticker symbol, is just that. So what is percentage of stocks within the S&P 500 that is on a point and figure buy signal? So right this instant we have 78.8% of stocks, almost 79% of stocks within the S&P 500 on a buy signal. It's a pretty large amount for sure. So for comparison's sake, notice that we were below 30%, we were at 28%, or even 23% right there on the 27th of October of this year. Finally, when we bottomed, we rallied till today. Down below here is S&P 500. So notice that this indicator is pretty useful. If you notice that, for example, oversold readings, like below 30%, for example, are usually a precursor for a rally. So the lower the readings are, the more likely that the rally will occur. The opposite is not always true, and I'll show you in a little while why I think that. But right this instant, a large number of stocks is on a point and figure buy signal. We'll try to figure out if this is a bad thing for the current stock situation. Additionally, I wanted to show another market breadth index that I use quite often, and that is percentage of stocks within the S&P 500 that is above 200-day moving average. Okay, so what the heck is that? So for example, for Apple, let's just look at Apple, and I put in the 200-day moving average. This is the 200-day moving average in yellow, and the question that this index is asking is whether or not the price is above this level. And yes, indeed this is above this level. So again, if the price is above this level, we will assign it a value of 1. If it's below 200 moving average, we will assign the value of 0. Okay, so this is another indicator we use, and notice that it just peaked at 78%. This is the highest level since, well, this is a year and a half worth of data, so it's at least a year and a half worth of data, data that is the highest peak. So once again, it's sort of the opposite. If the value is quite oversold, as in, for example, right there, 52-week low for this value occurred on the 27th of October, and then finally we got a rally, a pretty strong one as well. So during the bull market, we need to look for oversold conditions. But where is the level to draw? Like, for example, this level right here in March of this year, we didn't really even go that far low. We were like at 39, and then there was another level here at 46. Yet we got a rally afterwards. Okay, so where do we draw the line? In my opinion, even anything below 50% during the bull market, during an uptrend, is already oversold. Okay, is the opposite true? Will the high readings of this lead to a correction? So again, the data is not exactly 100%. So for example, this level right here in July of this year, indeed, elevated level led to a corrective action. Another example right here on 2nd February of this year, 2023, elevated level of this indicator led to at least a small correction. And I will get to, in a second, I will show you another example where it's important to understand that those overbought, oversold ideas are just that. They're not laws. They sometimes happen and sometimes don't. Another market breadth index that I use quite often is CBOE options total put to call ratio. Okay, puts on top, calls on the bottom. So the more puts, so this indicator is sort of opposite. You have to think opposite. We have a lot of puts. Okay, a lot of puts. You're gonna expect a rally. Okay, you have a lot of calls. You're gonna expect a correction. Is it always like that? No, not at all. It's just like one of the pieces of the puzzle. So, for example, right here, we had a tremendous amount of calls in late October. Did we get a rally immediately? No, we actually had to wait until almost November for the rally to start. So even though elevated levels of puts or a lot of bearish bets, puts are bearish bets, don't necessarily lead to a rally. Vice versa, do low readings of this, or in other words, more calls, more bullish bets, will they lead to a correction? Not always, also not always, right? Sometimes you have elevated levels of calls and then you get more elevated levels of calls, and only then you get some sort of a correction. All right. So far we have three market breadth indicators that are all overbought. Definitely overbought. We're definitely in an overbought situation, and there are more calls. In other words, everybody thinks that we're gonna go to the all-time record highs and then some, and that's where we get a reversal. Okay, so far so good. Now I want to show you an example where this sort of elevated levels didn't really do anything. So this is April 2021. Okay, this is bullish percent index. Notice that on this day it was at 85. Okay, right now it's at 79, so it was higher than today. All right, so in April of 2021 we had a huge amount of stocks on the bullish percent index buy signal, and see what happened. The stock market S&P 500 continued higher for another until from April until September, almost 6 more months before finally starting the correction. So yes, elevated level, no, correction did not occur. Okay. Here's that another same indicator, or rather, one of the indicators I just described. Percentage of stocks above the 200-day moving average in April 2021, 96.99. So almost 97% of S&P 500 stocks were above the 200-day moving average. Almost 100% of stocks participated in this rally. All right. And then the stock market continued higher. Okay, nothing really happened. I mean, yes, the number of stocks came down, but the stock market continued higher. Okay, so this is a bearish divergence, but in absolute terms, stocks did not correct because of the elevated readings. Okay, and here's a total put to call ratio. It peaked out in May 2021. Yes, it was. We had a lot of puts. That means that we were expecting a correction. Correction never came. Okay, and then eventually, only sometime in the September, October, we started correcting of 2021. So to get back to today's date, yes, market breadth is definitely overbought. However, correction is not imminent. We could just continue higher. All right, let's quickly look at dollar and gold. So there was a lot of volatility, obviously, with the dollar. Dollar, I thought, broke out into a new uptrend here in October of this year, just a few months ago. But then we got this deep correction, and finally, yesterday, on the 14th of December, we broke down below this red line, and to me this means a new bear market. However, today we rallied, so we'll see what happens Monday. For now, I mean, if I was to sell it short, I would put my stop above the blue line, so not that far away. This in turn is putting a lot of volatility into gold divided by US dollar. So the bottom part of this equation all of a sudden started getting weaker. So gold theoretically should take advantage of that and move higher. Overall, I'm not disputing this idea. We've been more or less buying gold here. Up arrows you can see right around the blue line. And actually, our latest alert was just sent out to my subscribers right there on December 14th. Can this reverse back into the bear market? Sure. There is so much volatility right now with gold and dollar that I'm almost like just not sure I really want to touch it at all right this instant. Do you guys trade any of the securities I monitor? What do you guys think about gold? What do you guys think about market breadth indexes? Make a comment. I'd love to hear from you. And then head over to masterchartstrading.com. Click on sign up for one of the products. Again, I have the trading indicators, which are these lines on the chart. You can use them to trade pretty much anything under the sun on most time frames. So for example, this gold can be traded, for example, on 5-minute time frame, since it's a continuous instrument. So in this case, you can kind of see we will be selling it short, something like that, with a nice move lower. Also, I have a newsletter. So newsletter gets sent out every day, and then weekly I sent out a members only video. This week we will cover all of these various securities, such as ARK Innovation, BOTZ, Frontier Markets, Caterpillar, as well as some of the small cap and speculative investments like Rivian Automotive and Iris Energy. So sign up for that. And if you want to, the best deal is to get both trading indicators and the newsletters on a monthly basis at $59.95 per month. I think it's a great deal. I also am finally about to introduce the yearly subscriptions. So if you want one now, send me a message and I will sign you up. Again, thank you for watching all the way till the end. Please don't forget to hit the like button, subscribe to this channel, share this video. If you have any comments, make a comment. And that's it for this week's recap. Thank you and have another great trading week. Bye-bye.